morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Global stocks start the new week after gains on Friday, instigated by yet more stimulus added by the US government as well as the Bank of Japan. Asian shares pushed higher and US futures reversed earlier losses to show potential gains for Monday's session. The S&P 500 is now only 19% away from its all-time highs. In currencies overnight, there were strong performances from the Australian dollar and the Japanese yen, but overall it was stocks that pushed themselves higher as markets awaited another week dominated by the coronavirus outbreak. There was some optimism from coronavirus data, however. For the first time in more than a month, the death rates in Spain, Italy and France slowed, and there were the lowest number of deaths reported in the UK and New York in more than a month. This week will be one that will see a big focus on macroeconomic data as the Federal Reserve, Bank of Japan and European Central Bank all announce their interest rate decisions. While many central banks can't move their rates any lower from their current positions, it will be a case of focusing more in the way of potential stimulus packages. The US and Japanese governments have already agreed deals to prop up the economy, while the Eurozone has struggled to reach an accord with the ECB President Christine Lagarde growing increasingly frustrated. This week also sees GDP readings from the US and Eurozone, which will give a key indication on just how hard the economic performance is being hit by the COVID-19 outbreak. Over 26 million Americans have lost their jobs in the past 5 weeks. Earnings season also carries on this week with the likes of Google, the parent company Alphabet, and Amazon reporting their Q1 earnings. The strength of global stock markets has been a focus for many over the last couple of weeks as many try and understand why the US indices remain close to a full recovery. There certainly is a nervousness about what comes once the positive health headlines are removed from the picture and the economic realism sets in. However, there's also been a solid performance on Wall Street in many stocks. Earnings have shown a robust performance from many major Wall Street firms, and that is what's keeping the index prices inflated. The energy market will of course be in focus today, but there is again an acceptance that unless demand picks up rapidly in oil markets, we could be well set for another roller coaster ride in the next few weeks on both futures and spot prices.